Good afternoon, ladies and gentlemen. We are not an energy company. We are a base metal company. And as you can see, the slide, we are moving what they call a porphyry copper, gold, molybdenum, and silver deposit toward production. We're obviously one of those companies that's in the leading edge of getting into production, assuming it all works out. And it is based on the supply-demand fundamentals for copper, primarily, which is commonly called the doctor of the economics in our business, and the huge imbalance in the supply and the demand going forward. The first slide is basically, you see on the left side, it shows the location of our Shaft Creek project. Clearly, it is exposed in a very, very hospitable area in northern West British Columbia, and that is fundamental when it comes to economics of developing a project. You have to have excellent location. You don't have location, it gets extremely expensive very quickly. On the right-hand side, you can see the location of the Shaft Creek. It's located in northwest British Columbia. And we also show this port of Stewart there because that is the closest deep water year-round seaport to the Asian markets, and that is where the most of the copper concentrates produced in North America usually end up going, because China is the largest consumer of concentrates and they're also the largest exporter of refined metals as well. This is our forward-looking statement. Please look at it very carefully. Not like the oil patch, we have a very inexact science. We do the best we can, employ excellent people, good softwares, always look at the data 3 or 4 times, mistakes are made. So as the QP, or the qualified person, I take responsibility for what the technical content of this presentation. So what exactly is CopperFox? We're classified as a development company. The size of the company and the advanced stage of Shaft Creek, we would be classified as a development company, and there's a very specific peer group in which we're in. We're listed on the Venture Exchange in Toronto, and our primary focus is developing the Shaft Creek porphyry deposit. We've retained Tetra Tech Wardrop to complete the feasibility study on the project. We've retained Stantec Engineering to complete the environmental assessment application, and that's currently underway. And one of the things we did last year is we secured the shipping and storage facilities for up to 50,000 tons of concentrate a month, which would equate to 600,000 tons a year coming out of the port of Stewart. The reason is because on the trade-off studies, it's clearly very much more economical to come out of the port of Stewart as to any other port further south in British Columbia. The 2012 milestones which we've reached, the first one, updated resource estimate, that has been completed. A very successful 2012 exploration program, that's done. Most of the results have been announced. Acquisitions, we've done a little bit of acquisitions during the year, and they're in the process of doing that, and we're still working on it. Feasibility study, EAA is environmental assessment application / permitting. That is currently underway. And the first and foremost, which is most fundamental to CopperFox, is what is Teck Resources going to do when they receive the feasibility study. This is the resource estimate that was completed by Tetra Tech Wardrop, effective date of May 2012. It's done pursuant of CIMM rules and best practice principles in Canada, which is one of the best in the world. And combined indicated and measured resources of 1.2 billion tons, 7.1 billion pounds of copper, 455 million pounds of molybdenum, 7.4 million ounces of gold, and almost 67 million ounces of silver. In addition to that, we have almost 600 million tons in the inferred category, which adds another 2.8 billion pounds of copper, 200 million pounds of molybdenum, another 3.4 million ounces of gold, and another 32 million ounces of silver. So if you look at the size of the deposit in tonnage grade, and you look at the contained metal, it's probably the largest undeveloped project in North America. And one thing I can tell you, at the end of 2011, which this resource state takes us to, we don't know how big it is. The Paramount Zone is open to the east, it's open to the north, and it's certainly open at depth. Next thing is the 2012 program. Our focus was to try and prove up a concept we developed in 2010. We focused on the discovery zone, which is located about 2 kilometers north of Shaft Creek. I think we've confirmed that based on the drilling this year. It looks like it's a different system. There's no molybdenum in it. It looks like a copper-gold system. The target is about 1,800 meters by 900 meters, and it's a very strong chargeability signature very similar to what we see at Shaft Creek, and there's a one-to-one correlation between the two. There's also a considerable amount of copper exposed in outcrop between the ES zone and the GK zone, both of which are very large zones of copper mineralization on surface, which also have a geophysical signature with them as well. And my opinion is we've moved this project from a single deposit project to a multi-deposit project. How many is there? I don't know, but typically in porphyry systems, you're going to find probably 6, 8, 10, 12 deposits. So I think we've had an extremely successful 2012 program. Acquisitions, on the right-hand side, you see Shaft Creek. We've added another 22,000 hectares to Shaft Creek. Why? Because in April of this year, Teck come in and took all the land between Galore Creek and Shaft Creek. They, like me, I believe there's a developing porphyry copper district in northern British Columbia. It's going to be called a copper province, and there's going to be a lot more discoveries up there. On this left side, you see Arizona. We've closed the Sombrero Butte acquisition. You can see some of the intervals and grades of copper that they have on that property. Our target is not the breccia pipes. We're looking for the source of the breccia pipes, which is typically a porphyry copper system. And now that we've closed that, we'll get working on that as well. And we're still working on the acquisition of the Van Dyke deposit itself. Feasibility study in EAA. The feasibility study is expected to be delivered the results are expected to be delivered in September this year. Our objective has always been reduce payback, lower capital expenditures. Everybody's concerned about CapExes and payback periods, and we're more concerned about than anybody else because our objective is to sell our interest in the Shaft Creek project. And clearly, if we deliver a very good economic project, we think we have a much better chance of attracting a partner. The EAA and the permitting, we're expecting to file the EAA application in the Q1 of 2013. If we can do it sooner than that, obviously that will be our objective. And we're also at the present time evaluating the benefits of filing concurrent permitting for a special use permit which allow us to put the road in. And these projects, fundamentally, the biggest thing is getting the road in first. Everything else can come very quickly after that. This is a little bit of a description of the Teck decision. Now, Teck has an option to earn back on the project, and that is triggered when they receive the feasibility study on the project. And from the day they receive the feasibility study, they have 120 days to make their election. They can go two ways. One, they can either walk away from the project and take a 1% NSR, which is a net smelter royalty, or they can take $1 million worth of shares in the company. The second option is they can elect to earn back an interest in the project. They can take a 20% or a 40% or a 75%, and it's a one-time election only. It's not a graduated election. It's not like a stepped election. You can't do that. If they go one times, they have to spend one times what we've spent on the project. And as you see at the end of the slide, as of June, we spent about $81 million. So for them to earn back 20%, they'd have to spend $81 million. If they want to earn 40%, they then have to spend 3 times that. If they come in for 75%, they have to spend 4 times that, plus they have to put up all the production financing to carry CopperFox through to production. And so that's the way the Teck option agreement works, and they have 120 days. So if the feasibility study is delivered by the end of September, they have 4 months from the end of September in which to make up their mind. Once they go past that date, they lose their election rights under the agreement. The other things that are very positive about Shaft Creek is that it has a very low annual precipitation. The reason I say that, because that impacts your operating costs. Because these projects run 365 days a year. There's no stopping them, and they're long life, 20, 25, 30 years. Low environmental impact. It's got a very, very low potential to have what they call acid generating rock, because the last alteration of Shaft Creek was a carbonate alteration. It acts as a buffer, and that is absolutely very good for this project. No fish habitat in the immediate vicinity of the mine site. Minimal impact on the wildlife based on a lot of wildlife studies. The northern transmission line to Bob Quinn is currently under construction, expected to be in place by the year 2014. And without that power line going north, none of these projects, Galore Creek, Red Chris, the rest of them would all be, would have to seriously relook at those projects without that power line, and that's going to be a big impact. Because I think the cost of the power off that line is going to be like 4.6 cents a kilowatt hour, and we're in a friendly jurisdiction. We figure geopolitically, you see what's happening around the world, environmentally and geographically very hospitable in our opinion. And a little bit of corporate information on the company. We have offices in Vancouver. We have offices in Canada. Thank you very much.
Elmer, God bless you. Thank you.